One of the things that that stuck with me is this idea that countries now, cities are almost like these micro nations,
Yeah.
and the cities are more similar than the countries are, and that was sort of a fascinating thing. Even myself, like when I think about, okay, if I don't live in Miami, I don't think of I'm going to go to, I think of, hey, maybe I want to move to Dubai. You don't think of moving to a country. You think of moving to a city. I was just extrapolating that, what if Kathmandu is really, built as a micronation, that it has its own ecosystem and an amazing identity where, someone would say, listen, wellness and this and that, but there's something else interesting where actually people can make an amazing living. That, stuck with me when I went through our recording. I thought that was yeah. And there's incredible arbitrage, like your governance arbitrage. Now the cities are competing. You have regulatory velocity. I see Miami doing that in an incredible fashion.
Cities just have a lot more, mayors are such a like relative to like the president to the Congress or like the prime minister to like the sort of like ministers, right? Like or not the ministers, the members of parliament. Uh,
Right.
and that is interesting. I mean, also you have to think about like, I always say like New York City's been, at least like back in the day, it was known as New Amsterdam when the Dutch first came. And so like, um, in many ways, like New York City has been a city before America, right? You can
Right.
imagine like, like cities just being much more resilient, like surviving like multiple different sort of like regimes or civilizations, right? Like the great cities around the world, right? There's always these stories about, it was fun, it was fascinating when I went to Mumbai like a few months ago, like learning it was like a Portuguese city and like then obviously like the Brits, and then now it's obviously under like part of India. But you can imagine over like a long enough time horizon that cities just they're much more resilient because there's so much sunk cost. Like, why would you if you took over a country, why would you force the city to move somewhere else or dissolve it or something like that? There's all this economic activity happening already. There's all this like sunk cost. There's all these like investments. So cities are sort of like this. I mean, you're trying to conquer cities, right? Like you're trying to
Right.
conquer these economic hubs, and so it makes sense to like leave them intact and let them be because it's much easier to like collect like the tax revenue and sort of like extract that way rather than like destroy the city, for example.
Right. Right.
So
Yeah. And what's interesting is, as you mentioned earlier, I look at mayors as almost founders, because they have unbelievable amount of latitude, and then the things that they do directly impacts people that live there, like safety and transit and trash and policing, zoning, business permits, housing, which is very, very difficult for like the national government to do. And I just, and these things have such greater influence in the quality of life you're living. And so, and I was just reflecting on it. The city is, I think, 10, 20, 30 years, maybe 100 years from now, I just feel like they will have such disproportionate power to impact the life you actually lead, even more so than the country. I mean, of course, there are certain public goods that the national government has to provide, right? But that's it's almost like a CEO, of a city. They can move fast and do all those things. And that's something I was just listening to it and they had a line, which is Kathmandu is a lot more closer to New York City than Nepal is to the US, and that couldn't be more true today. And I think it's going to be more and more truer, 10, 20, 30 years from now.
yeah, and that's why like it's important for when you try to like brand any region, like trying to brand like a tech hub and stuff like that. It's so important to figure out like new novel nomenclature terminology for it because I'm obsessed with like sort of I think the biggest advantage people always have is like obviously if you already have a great brand that's great, but if it's better to have a great brand. Obviously it's best to have a great brand, but it's better to have no brand than a okay or good brand because at least like no brand gives you like a blank canvas to paint on. And,
True.
it's like much better to like start from zero than start from like an already like sort of preconceived notions and judgments about what like a particular city might be. So I think there's like some advantages to Kathmandu in the sense that in many ways most people don't know about it, right? People might think that they do, but like and people in Nepal or Kathmandu might think that Most of the world knows about Kathmandu. Most of the world actually doesn't know about the city. So it like creates, intrigue. And if you're able to sort of tell the right story, then it can actually be like really compelling. What's interesting to me actually is like if you went back like, 20 years, 30 years, and you asked people like, hey, if you ask somebody a trivia question, right? Like, give me the name of a peaceful Himalayan kingdom in Asia. Most people would say Nepal. Obviously, today that's Bhutan. In some ways, like the sort of like branding that Nepal had like 20 years ago has all just gone to Bhutan, right? Like this Himalayan, peaceful, quiet, like tranquil place. I feel like, at least like Nepal is still like struggling to like figure out its identity because there's a few things happening, right? Simultaneously. There's the sort of like changing in government structure that's like it's like learning how to be like a democracy in some ways. And then the other thing that I think is happening right now is it's graduating from like low income nation to like middle income. And that I think is also creating a little bit of like an identity crisis for folks of just like, okay, it's not just like this poor and downtrodden country. Obviously, it's not a super wealthy nation. Like, how do you navigate like that messy middle?
I think that's an interesting point of view, particularly around being able to brand Kathmandu. Cost. I think at that time, the old branding of Kathmandu was probably closely tied to Nepal's branding. I think at that time it did have that missed. I mean, Kathmandu wasn't really a city the way we think about it today, years ago. So it's. I'm not sure if there's. I mean, there's certainly the mystical element to it, but for losing it, we at least have a democracy today, and a republic today. So it's probably uh, a fine trade-off. But I do, to your point, I do think there's an unbelievable opportunity for regional as well as global branding. I mean, I think the regional is quite obvious. We need to capitalize on that. I mean, someone was telling me that maybe I saw it somewhere that there are more flights from Nepal to China than there are from Nepal to India, which is really
Mm.
surprising. What that basically says is there's just this dramatic, ginormous potential ability to drive clear brand. Like when you think of Kathmandu, what does it actually mean? Like what does this, why would you go there? I guess there's some religious tourism, but you don't really go to Kathmandu to be in Kathmandu. And so I feel like there's just this significant, uh, and the identity crisis of Kathmandu is truly, I mean, there's real substance behind it. We haven't, I mean, yes, you can spend a day, maybe 2 days in Kathmandu, but then for someone that, really goes there from or something like that. So I just think that both the depth and the breadth needs to be deepened and widened, I guess. And the city still lacks it. But I think, just thinking about where we are situated, even regionally, um, should be, I'm not going to say easy to do, but I think it just seems logical and rational, right? Like if you really invest in adding an interesting dimension to the city life, and there could be have that interesting branding. Anyways, just kind of the idea that you talked about got me thinking that maybe Kathmandu just and I think we should talk about the golf cart thing. Really, uh, that point on, and that was a fascinating thought, by the way. So fascinating. You want to talk about why you think
Well,
golf?
I think yeah. I mean, I'm fascinated by like organizing cities around their native like natural strengths. Every city has like natural constraints, right? Some are around mountains, rivers. Some are big cities. Some are like small cities. Some cities are really cities built on top of like ancient cities. So like, you don't have the ability to sort of like pre-plan. So in the U.S. it's sort of I liken it to like the difference between if you go to Lower Manhattan, the streets don't make sense. There's crisscross and it's not a clean grid. And you go to sort of like north of 23rd Street, and then everything just becomes like really, just like clean lines across the board. And it's a real grid in the middle of Manhattan. And that's because, when the Dutch first settled in the south of Manhattan, it looked a lot like how they navigated sort of, a lot of these European cities are built, which is really for people to walk and horses and carriages and all of those things. We didn't have cars back then. And so, and Kathmandu is an ancient city, right? You look across Nepal, like the newer cities that are being built with sort of modern urban planning in mind, like grand highways, grand boulevards, grid layout and stuff like that. But Kathmandu being like a large city of, I think right now the population, it's hard to get like a true population census, but I think I would say like more than 10% of Nepal's population is there. I think official records are 3 to 4 million, but I'd imagine like Greater Kathmandu probably has 5 to 6 million people if you actually like mapped it out properly. And so it's a really large city, but within, Ring Road, like the central part of the city, it's actually not that big, right? It's a handful of kilometers wide. Let's say even if it's like, 7 by 7 or something like that.
The
Uh,
radius is probably, since it's a valley, the radius is probably 6 kilometers. So you're really
yeah,
talking, having to travel 12 kilometers to go from one end to the
yeah.
other. When you think about, like, I reflect on my commute, it will take 40 minutes to travel 3 kilometers. It's like I could literally, do a morning run or a walk to work and be faster sometime during the times of congestion.
Yeah, exactly, exactly. And so like I think the idea was really like, okay, here's the city. And then I remember, sort of just going and like you realize when you're driving in a car or sitting in a bus or just like navigating around Kathmandu, if you look at the speedometer, you're really rarely, if ever, going above like, 25 kilometers per hour. Part of the reason is so a lot of people don't wear seatbelts, and I was like deathly afraid, like, oh my God, people don't wear seatbelts in Kathmandu. But if you really think about it, like the reason why people don't wear seatbelts, the cars just don't go that fast, right? Like, and so folks find it really inconvenient to wear seatbelts. So when you're going like 20 kilometers an hour, it's just like simply just like not that much, right? Oh, it's 1.6 kilometers per mile, right? So you're talking about like, I don't know, like 12, 13, 14 miles an hour, 15 miles an hour. At most, you might be going like 20 miles an hour or something like that if you're going down a straightaway when it's clear. But even then, within a couple of kilometers, you're going to run into traffic. You're going to run into an intersection. You're going to need to slow down. And so there's this like really fascinating dynamic in the city where just like there are these like really big cars and bulky cars, and there's like these the vast majority of the routing network, the road network in Kathmandu isn't actually taken advantage of, right? So they're rebuilding Ring Road, which is like the road around the city. But if you look at there's actually a whole network of small roads just sort of like scattered throughout the city, right? Just like they exist. And a lot of cars can't take those roads. So what it does is because cars are really big and buses are really big, it actually constricts these larger arteries where most of the traffic jams end up building up there. And then, the cars don't end up actually using those smaller streets. And so my idea was, you know, you just like ban cars in the middle of Ring Road. You just make it like a golf cart, you know, just everybody in Kathmandu should just have a golf cart because one, it drastically increases like the surface area of roads that you can actually like take advantage of, right? Because now the small roads that could barely fit like a big car can actually fit 2 to 3 golf carts at once, navigating through it. So it really like opens up those smaller arteries of road networks in the city. Golf carts go fairly, they basically go about as fast as like what a car is driving most of the time anyways, right? Like they can go up to 15 miles an hour, which is like, 25 kilometers an hour, like easily, which is more than enough, by the way, for you to get anywhere from point A to point B. You could probably get anywhere in Kathmandu. You could probably get any two places in Kathmandu within 20 minutes if you had a golf cart and maybe even 10 to 15, especially considering that there'd be no traffic. And then the idea, they have traction. It's actually very family friendly, right? You see a lot of people using motorcycles. Motorcycles are not family friendly. You see 3, 4 people on top of a motorcycle. It doesn't make sense. It's really a single person vehicle, maybe two at most, but you've got families, you got people using scooters, people that want to buy groceries, people want to take goods from point A to point B. So the sort of trunk space in a motorcycle or scooter is just not that much. But a golf cart is just like super convenient. It's durable, it's rugged, it's electric powered. So, you can just plug it into an outlet actually, by the way. So you don't even need like custom outlets or anything like that. And yeah, it just feels like the most obvious thing to do in Kathmandu is just like allow for golf carts. And I think it would be like from like a economic empowerment of women. It'd be much easier for women to learn. A golf cart's super easy to drive. And also, because women generally control more of the sort of like family part of the of the of society, right? Because of just like where they are, like in terms of taking care of the kids and taking care of the household and stuff like that. They just have so much greater latitude. It would lead to so much more like freedom to make the city accessible and navigable. And you can really like retrofit golf carts to fit up to 6 people if you wanted to, two in the front, maybe 2 to 3 in the back if you have kids. You can even have like some seats in the back and the rear. And so, yeah, this is sort of like my grand plan to make heaven do like that, just like a thriving, accessible, and accessible city. Yeah. Anyways, that was the theory. I hope it.
Yeah, I hope, and Listen, I mean, it sounds like a joke at first, but it might very well be the most sensible mobility solution for Kathmandu, and it's also quite futuristic. And I was googling after our conversation on AliExpress how much a golf cart actually costs, like a respectable, reasonable golf cart, EV golf cart. It's like $1,200. So even if you do import duty and stuff, it's how much is it? Like 2 lakh, right?
Yeah,
So it
yeah.
is unbelievably affordable.
Unbelievably affordable. You could drive it in the rain. You can drive because they've got these like plastic covers that you can buy. Like you could, it's all weather accessible. The traction on golf cart tires is actually perfect for the sort of like pothole ridden roads because the vehicle itself is not that big. Even if you drive over a pothole, it doesn't actually create like chaos for the car. It's just super small. You have a low center of gravity. And so I remember when I was at Stanford, like, I would get access. Some of my friends would have golf carts and stuff like that, either through like injuries or through like the different sort of offices they worked at. It was just so much fun navigating around
Yeah,
like the city, because you just like be in between cars and stuff like that. But like, it'd be super easy to go to class and
yeah.
just like hitch a ride, and like flag somebody down. I find it to be super, Cavendish a very like close, tight knit community. Like, everyone sort of knows one another, and it's very low key, and so it'd be super easy to just like hitch a ride with somebody, like if somebody was driving a golf cart, I feel like I'd be likely to be like, oh, like where are you going, like let me just come with you because it's open air and you'd feel comfortable and stuff. Like it's not like this like boxy closed vehicle with tinted windows where you're like, I don't know if I want to get in that car. But if it was a golf cart, you just be like, hey, where are you going? Let me just go with you, right? Like I need to go to Ring Road. Let me just hitch a ride or something, or I need to go to New Road or something like that.
Right. I mean, just to add one final point from as I was thinking about this, as a society in Nepal, I don't think we really think about the productivity tax that mobility has. Like to get to the office, you lose, and we try to change our office hours to give people more time than they, so that they don't waste an transit, and maybe the golf carts would help us get there. I mean, some of these smaller roads do become ways, and they become far more relative to a car or a bus. You can essentially drive golf carts through most of Kathmandu's
Yeah,
roads. I just think that that's even if there is like 10-20% increase in that. If you really look at the math, people get to spend more time with their family or more time getting to work. And so there's definitely that. And I was just going to recommend this to whoever is going to be the next mayor of Kathmandu has to pick this up. And hopefully they give you some credit for it. In, I'm from Chitwan, and in Bharatpur, I would argue we kind of have it, which is very similar. People
right.
own it. They're mostly, and I like that because the utilization is really high and people get
Yeah, yeah.
jobs. Because that,
Right.
like my mom, she doesn't drive, but she gets around because she's hailing tuk-tuk, and it's all electrified. And the other exciting thing is the technology needed for this isn't that advanced. The unit like a huge assembly plant, so you can
No.
actually buy parts in. You can import parts and actually do the highest value assembly in
Yeah, it could actually even reduce the tariffs, right? It could actually create jobs, right?
it
Because
can
you'd have
actually.
you can have a assembly plant, right? You buy the all you really need is battery and like the pre-made prefabricated parts, and it's just
That's it.
about getting that in, and then you assemble it, and then fixing golf carts is actually not that hard either, right? Like these
Right.
things are just fairly durable. Actually, they last quite a bit of time, and so it's battery powered. It doesn't have any of these. So if the battery doesn't work, you swap it out. Everything else is mechanical parts. So like yeah, like you probably need to do like maintenance around like the brakes and tread on the tires and stuff like that. Like beyond that, and some other mechanical parts, it's like fairly straightforward. And
Right.
everybody has a mobile phone, so like a lot of the cost reduction is you would get rid of like a massive vector of cost in most vehicles, which is the electronics dashboard that exists within a vehicle. It's actually like ruins warranties all the time. It breaks all the time. You have to maintain all the software. It's like a massive cost burden. All right. But like if you have a golf cart, there's no expectation. The thing is, people, when the moment you say car, people have an expectation that it has to have like a nice big LCD screen now, and there's this expectation that it has to look a certain way. But if you say golf cart, like you're automatically anchored lower. So like even if like the dashboard just like plastic and nice and has a few cup holders, you'd be like, oh wow, this is great. If it has like a phone holder, you'd be like super happy, you know?
Right.
You know what I'm saying?
Right, right. No, there's actually, it reminds me that there's this Chinese guy that moved to Bharatpur and started his tuk-tuk assembly plant. And he was selling, I don't know how, the volume, but he was actually, I was thinking about the US and China, you have these gigafactories, but maybe it's time for mini factories.
Yeah, yeah, yeah.
Polar
Mega.
opposite of what's happening here. But listen, it's a brilliant idea. I think,
I would love to own a golf cart in Kevin.
I
Like,
would
I don't
love
know if
to
I can
own,
drive.
right.
I don't know if I can drive in those streets, but I would just love to like ride around in a golf cart, just visit all my friends. It's just like, would make the mornings so much fun.
That's right. Great. Should be,
Awesome, awesome. What other topics du jour do you think it makes sense to sort of like explore here? I mean, we've got a few, right now, like the obviously like the big topic right now in America is immigration, right? On the sort of like more political side, but then of course on the tech side, I don't know. I shared with you that
Michael Burry's.
yeah, Michael Burry's first blog post. What did you think about that, by the way? Just him talking about value investing, right? Like value investing is it's fascinating me in value investor right now, considering like the forward multiple on the S&P and some of these things. But yeah,
Well, I mean, first of all, though, if there was no Big Short, I would be curious where Michael Burry would be today. I mean, he was doing incredible work even before he got that sort of a stardom, thanks to that Michael Lewis's book and maybe the movie. But I was, that was the first thought I had is where would this guy be? And I was the way he was approaching investing, even in that first blog or whatever, was quite fascinating. And I mean, we live in a day at a time where Kathy Woods, who is buying these zero revenue companies, and she claims to be a value investor. I mean, the fact of the matter is, what is the time frame you're talking about? What risks are you taking? Simply because a stock is cheap, has a low PE, does not make it devalue. It's just a misunderstanding of future potential. The price not reflecting the future potential, right? And that's how, someone like Kathy Woods paying 300 times revenue or sometimes infinite times revenue because the companies don't have any revenue. She's able to justify it. So, the traditional value investing is perhaps, I mean, there's just so much technology risk in almost every industry this day and age. I just think the traditional definition of value investing is changing. The second issue is the indexization. I mean, pretty much everything, almost all stocks are now owned by these index funds, the passive money going into it. And therefore, the prices don't reflect the deeper research. And, what that does is it mellows the volatility. And I'm a big fan of volatility because it's a price discovery mechanism. If you just kind of buy companies on a weighted average, market cap weighted average basis, as someone who's passionate about this makes me a bit worried. But, I go back to the fundamental view in investing, which is almost all investing that's worth doing is value investing. Okay, there are people that do momentum stuff. There are people that trade. There's, of course, the high frequency trading with
well,
very
no
personal.
investor wants to say they're not a value investor, by the way, because what you're effectively admitting is like, you're a bad, if you're not a value investor, you're a bad investor. If you're not
Exactly.
buying a
Right.
stock because you think there's future gains to be had, then what are you doing,
Right.
right? It's basically might as well be gambling. But one idea that I've just sort of been noodling on is like, Michael Burry, like the format he's taken here, right? Like so he was there's this concept on the internet where like 1% of the people contribute and then and 99% like consume, right? The idea that there's like 1% YouTube creators, 1%. And so he was talking about how he would like troll these like message boards back in the day, right, to figure out like stocks and where things are and like trade while he was a resident. But now he's on Substack. He's gone from a consumer of this information to really a creator of this information. And so because the barrier to creation, barrier to being a creator is so low, right? It's a few. I don't know if it's. I think Sam Altman sort of alluded to this in a recent podcast. I don't know if that ratio that like 1% are creators and 99% are consumers is the case anymore. It may actually be flipping. And so what does that do in terms of like the zeitgeist and how people perceive and view markets, right? If you look at the 99 bubble, there was most people understood the markets through the lens of big media, large media. And so if CNBC said, you had to buy something, if CNN, there was this frenzy that you could feel, you sort of got to this place of this sort of like uniform, there's this concept of called like the monoculture, right? The internet has really broken down the monoculture where like, back in the day, everybody would talk about the same TV show that they watched, that Sunday night, everybody would talk about the Sopranos or something like that back in the 90s. And, there were, you went through these like monoculture like vibes. And I think in finance, something similar happened too in the 90s where everybody knew this internet thing was big, and most of the bets were on one side because that's what the large media would pump. Blogging isn't really what it is today, sort of like the 99% create. So, creating their own contents. It really made me think about just like there's so much noise in the system, like, will we ever get like a blow off top bubble like 99, because there's so many people that are willing to take the other side of that bet and get massive distribution for their ideas. Whereas maybe in the dot-com bubble, that wasn't necessarily the case. So if you were like screaming from the rooftop saying like, hey, there's a bubble here, there's a bubble here, unless you can get in front of like one of these like big media houses or get your article written, in Barron's, right? Like that Amazon.bomb like piece that was a famous one back in the day. So I'm not sure if I'm articulating this idea adequately, but I do think like the opportunities for more people than ever to have commentary about the market and then get distribution for that commentary from folks like Michael Burry, but there's obviously others, I think creates these inherent mechanisms where you learn about market inefficiencies maybe much like well before they become these bubble manias. I'm not sure. What do you think about that?
I I do. I mean, you raise an interesting point. I do think the bubbles are created because of in the most fundamental level, it's a human condition that creates bubble. I do think there will be. I mean, there are always bubbles in the market, except the internet was such a massive force, similar to, let's say, AI and potentially cloud, mobile that we saw, but maybe bigger than them. I mean, internet, compared to the base on which it arrived, internet was a massive thing. It required unfathomable investment. It gave, unimaginable possibilities to folks, and it took, much longer than people anticipated to materialize. But perhaps it materialized even more significantly than anyone would have imagined in 1999 or even 2000s. There are undercurrents like that, and AI could certainly be one. Is there a possibility that assets, the value of the assets would inflate beyond, um, their future cash flow, the present value of the future cash flow? Absolutely. The interesting thing about the whole what's happening right now is, but one thing to keep in mind is there are always micro bubbles, right? There was like think about 2021, 2022, hydrogen fuel cell micro bubble, solid state battery micro. I mean, these were bubbles. There are companies that are trading at such ridiculous valuations. If you look at where the stock price,
2021 was I think the last sort of big bubble that,
perhaps.
in terms of forward multiples, in terms of the types of term sheets that were being written by investors, right? Yeah.
But you could make the same argument for certain categories of companies that the exact same thing is still happening. Like there's this company called Oakland, the nuclear energy, startup. There are a few other aviation related startups. No revenue. The companies are, $20 to $30 billion in market cap, publicly traded. I mean, yes, is the technology potentially viable? We see flying cars in our lifetime, probably. But are those going to be the two companies, or is the the first dollar that has gone in, is it going to be able to get that kind of return, that kind of a the net present value? I'm not so sure. So my point is that there are micro bubbles all the time because we tend to get excited, and that excitement, by the way, gives the entrepreneur a lot of capital they need to be able to experiment, to be able to make a lot of mistakes. And I'm not an anti-bubble guy. I actually think that bubbles are in these
Bubbles are
early
good. Yeah. In
in the
some
long run there.
sense. Yeah.
Right.
Yeah.
So, like if you see an unbelievable undercurrent of seismic uh, shift that's happening in technology that affects every aspect of our life, could there be a bubble of the size of what we saw in the dot-com era? Potentially, right? And I do think that if you look at all the meme stocks and how assets are getting value, I mean, look at Open Door. There are companies that it doesn't make any sense. You wake up the
Not
next day,
investment advice, by the way. It should be clear that we're not giving it. None of this is investment advice.
but the reality is that as I mean, there's groupthink, there is greed, there is the greater full point of view, and all of these things do feed bubbles. And would the bubble be as big as it was in 1999, as expansive as it was in 1999? I'm not sure. You probably need something as big as internet, and something that has. There was a time lag that was not really factored in. I think the AI time lag is far shorter than what we saw then. So I'm not too worried about it, but I do think the humans, when they come together fueled by greed and cheap capital, I wouldn't bet against there being another massive bubble.
Yeah, I think my point wasn't to say that there won't be a massive bubble. Obviously, it's human nature. We've had bubbles throughout history in very different circumstances and stuff like that. But I do think the way in which information diffuses today is very different from previous eras, just because so many more people can contribute, and so many independent thinkers can actually get their voice across. Right. Now that doesn't mean we're still human. We're still plagued by the same challenges of sort of the logical fallacies that consume us. Right. We're always looking for confirmation bias. We're always plagued by availability bias and all of these different biases that really cause us to sort of only seek out information that proves our preconceived notions in many ways. And so, but one thing that I definitely agree with, Michael Burry, is the way to make money over a long enough time horizon, and we're not even saying that long, right? Like if you're looking at a 10, 20-year, 30-year time horizon, it's to own good companies at discounted value, right? And you have to understand what makes a company good. What are their fundamental strengths? There's that famous book Seven Powers that talks about the different types of moats that companies have. Right. And so thinking a lot about like sort of like moats and the strengths, like Nvidia, like how resilient is Nvidia's moat, right? I think that's part of the reason why right now there's some questions about GPUs versus TPUs, tensor processing units versus graphical processing units. Google's famous for championing TPUs. NVIDIA has GPUs. GPUs, I would say by and large, most of the industry would agree are still on the bleeding edge. Um, um, in terms of AI and what's possible. Right now I think Nvidia is trading at a lower 4P multiple than Google, right at this current moment, which is like, you know, to me pretty fascinating, considering just a couple of quarters ago, because revenue growth is so impressive that a 50x 60x forward multiple immediately within a couple of quarters turns into 25 to 30x revenue multiple, which is like something that people are willing to bet on,
Right.
just because of how fast the revenue, just how substantial revenue takeoff has been and how resilient they've been. And also in markets, it's all about timing, right? Like I think the if you're investing in Nvidia today, what you're betting on is you're not betting on their revenues in the sort of future quarters coming up, not in the next 3 to 4 quarters. You're sort of betting on the second derivative, which is their their ability to innovate far outpaces the rest of the market. Like, is that true? Right? It's really not about like, oh, like the revenue growth is going to be substantial. They have some differentiated way to innovate that no other company can copy. Is that fundamentally true or not?
And
Right?
for a long period of time,
For a
and
long
that
period of time, for
that's a
for
pretty
decades in many ways, right?
protected,
Yeah, yeah,
right? And so now
yeah,
I do think it's you know Nvidia is, to me, it's quite tough. I mean, my philosophy here, and I think, I really like, there's a lot of set things, right? We're looking for asymmetrical outcomes, right? Big upside,
yeah,
limited downs. Where could that really
right,
come from? It could come from, market does routinely misprice risk, right? Because what happens is you have all this narrative that really drown out the
yeah,
fundamentals, right?
yeah,
And and when you find those temporary disconnect, and by the way, finding that does require patience, and it also requires independent thinking, which I think, I mean, when I think about Buffett moving to Omaha, the other guy, Chuck Akre, is like in a small town in Virginia. There are guys that are so meditative and they want to be away from the noise. They just want to read I know fund managers that don't even meet the management team because they realize that most CEOs are great storytellers and they'll make you believe. They compromise with your framework of independent thinking. They're such great storytellers. And you start developing these software. So the point is that taking and investing as a discipline that requires patience and independent thinking. Those patience and independent thinking, if you think about it, it's not about what someone else says. It's about, I mean, it goes back to who you are as a human being. I genuinely believe that great investors, whether you can train to be a good investor, but I think great investors do have a different temperament. They have a different kind of patience, that they are generally contrarian, right? And so, yeah, how do you get there? How do you build that patience and independent thinking? Of course, experience helps. A relatively easier path is to look for areas with, fear, misunderstanding, maybe cyclical headwinds. This is, by the way, one of the interesting areas where, cyclical companies, the stock price goes up and down, but their earning ability from cycle to cycle only goes up. That's what I love these hotel, the Hyatt and Hilton franchise that don't have the liabilities. Like, yes, will you have a down cycle? Of course you'll have a down cycle, but cycle through cycle, their earning power goes up by 3 times, 4 times. And therefore, if you look at a peak cycle for Hyatt or Hilton, and you look at the next peak cycle, we're talking economic cycle, you see 3 to 4 times your money from cycle to cycle. So there are these areas and opportunities, but I do think that it just requires training yourself to be patient and think independently. It's not about crunching numbers. I mean, numbers are important, but companies don't change from quarter to quarters. Great companies, they hardly change, year on year. And, being technology guy, I mean, we're building technology driven companies. And to say this is almost blasphemic, but the fact of the matter is great businesses that create generational wealth, they are able to do that because the moat is so strong that things hardly change from quarter to quarter. And when you see those volatility from quarter to quarter, those are opportunities.
Right. Right. Yeah, I mean, I keep thinking about like some of these companies and just the sort of like sheer amount of investment that went into them over, like Nvidia was flat for a full decade, nobody would have bet on that company. All right, it was acquisition fodder for for some time, right? Trading for just a mere billions of dollars. But I think that it takes a long time to build that type of capacity. This is why I don't necessarily as I build my company. I don't look at long periods of sort of like flat or slow growth as necessarily bad because, if you're investing in the right ways, if you're investing in differentiation, if you're investing in sort of deepening your, increasing the switching costs from your platform because you've added so much value to your customers, right? That can end up paying like large dividends in future quarters. It's actually it's not every business over its entire history is just up and to the right all the time. You have to actually like build things of value, and those take time. It's about capital allocation and investing in the right things, investing in the right sort of like points of differentiation that actually matters. And yeah, but fundamentally, I'm somebody that like is a total ETFs guy. I know you like stock picking. I prefer just like if I could have most of my money in BOO with a little bit of with a little the S&P 500 ETF from Vanguard, right? BOO with a little bit of a QQQ thrown in there as a as a teaser, that would be more than fine. Because for most people, the way that they're going to make their wealth is through their career and what they build, right? Like what are the skill sets you end up investing in, whether you start a company or get like a large position somewhere over the long run, real estate, all of these things. And, there's other things to invest in too, right? Like family time and all these other things. And so other areas that actually matter more than maybe just like the dollars. So, and, I've seen people just sort of like for 2 to 3% return sink like, 20 to 30 hours a week. Like, was that a good return on investment? You got 2 to 3% alpha from the market, but like, was that a good use of time versus like what you could have done with that time, right?
And peace
Yeah,
of mind.
peace of mind.
Right. And that is the huge benefit of indexation and not having to take leverage, not having to follow a company. And the fact that we can actually participate in that kind of wealth creation in and of itself might be one of the greatest modern miracles. Simply buying an index
Yeah.
that you can compound your wealth
I always say S&P 500 is one of America's greatest inventions, right? Like,
I
it's
absolutely agree. Absolutely. And going back to your earlier point, the point around patience, if you look at it, almost, I haven't gone back and it's been a while, but I spent some time looking at, let's take a look at companies that have 100x or even x in the last 20 years, just to, a lesson on patience. And let's go look at the drawdowns, right? But think about the from peak to trough drawdowns. You would be shocked. Yeah.
yeah.
And one would easily get to that. People will see why someone like Warren Buffett, that it is an accident that we have an investor as great as Warren is, that people
Yeah.
can live through 80%, 70% drawdown, and 2, 3, 4 years of flat, no returns. I mean, even Nvidia. I haven't gone and looked at Nvidia's uh,
Nvidia was flat for a long time, like
for a long
barely
time.
any
I'm
growth.
sure there were like dramatic drawdowns as well,
Oh, there were massive drawdowns on Nvidia.
and it's just a different kind of mindset. You will lose sleep um, if you're not built to stomach that kind of volatility.
You have to have the temperament. Patience is not about waiting. Patience is about withstanding, right?
Right.
So like most people think like you just have to patiently wait for like 10 days. No, no, no. No, most people think, oh, if I just only invested like $10,000 in Amazon or Microsoft or Nvidia or whatever, any of these like Mag 7 stocks that have been on this insane run up, right, in the last like 10 to 20 years. And they say, well, if I put $10,000, I'd be a millionaire or something like that. No, it's like the way it works is if you put $10,000, you would have to watch it go to 30,000 and then not do anything, and then watch it go back down to 12,000 and then still not do
Right.
anything. Watch it go up to
Right.
like 100,000 and then not do anything, and then
Right.
watch it go down to like 20K, and then watch it go
That's
up to like 500,000 and still not
right.
do anything.
Right.
You'd watch this thing hit like new peaks after being punched in the
Right.
gut and still
Right.
not do anything. And like, who has it flies against human nature to
It
not
does.
watching an asset go up 10x after it's been down, right? And still not do anything and still not have the guts to say, hey, okay, maybe you have it, but is your family going to be okay with that? Like, are you sure, your partner or your wife is going to be okay with you watching you struggle with an asset for years at a time, watching it, make new highs and actually have a positive return and then willing to hold on to it for like the next, it's impossible. Like these things are literally you're talking about, this is why it's sort of, investing in some ways at the top tier with like the Warren Buffetts and all these of the world. It's like the Olympics, man. It's like this elite competition of temperament, of just like, do you have the temperament to navigate that?
Right. Absolutely. But there is a hack, by the way. And on that point, the Nvidia's worst drawdown was 89%.
Yeah.
Think about it. That you would
Yeah.
be okay losing, I mean, dollar go to 11 cents and still
11
hold
cents.
on to it. And
Yeah.
that dollar ended up being $10,000, which is a different
Right.
story.
Right.
You would have to watch it go down to 11 cents in the 2000s. Going back to your point, there is a class of people that hold on to it, that they have no choice but to withstand that volatility. And they also happen to be the richest and the wealthiest. You know who they are? The freaking
Real estate
entrepreneurs. They have no
for the
choice.
entrepreneurs.
Jeff Bezos had to hold onto his Amazon stocks. Imagine he wasn't running it. I'm sure he would not hold it for as long as he did, right?
Yeah.
Zuckerberg had to hold on to his
Yeah.
16, 17%, and so that's the incredible thing, is that there are these uh, patient investor. There's a class of patient investor who happen to be the operator themselves, and it's not, and they never thought of it as investing. They thought of it as, hey, this is my business. I'm going to own it, and I'm going to
Yeah.
own it through thick and thin because I'm absolutely confident in the future, right? And so that all clearly tells you the right way to do this job, investing job, which is,
Right.
that's great, hold on to it, right? Through
Right.
thick and thin. And the entrepreneurs do it, and therefore they are able.
Forced holding, literally, like I would say most wealth has been built on forced holding, right? Because if you think about it, one of the biggest ways to generate wealth is real estate investing. Part of the reason
Right.
why that's the case is real estate is the only asset class that you can't sell overnight if you panic.
Right. That's right. Right.
Like, good luck trying to
Yeah.
sell your house, if the market
That's
has
right.
like a 30, 40, 50% correction. It's just not going to happen. And the other thing, it's not mark to market every day, right?
It
So
is
you
not
can
my
rest easy. Like those are the two things. Yeah.
right. That's one of the first things, especially in equity in public market investing, is that you have to tell yourself, listen, the companies don't change from quarter to quarter. Like what stock price and companies are two different. Over the long run, they are the same thing.
Right.
In the short run, they are two different things, and you have to treat them as such.
Well, yeah, it's a Benjamin Graham quote, right? Like in the short run, they're voting machines, right? And in the
That's
long run,
right.
they're weighing machines, right? And so,
Right. Right.
you know,
Yes, absolutely. And going back to real estate, I mean, imagine borrowing 80% of your capital and it being marked to market. Almost everybody would be bankrupt, right?
well, I think not everybody would be either everybody would be bankrupt or people would have massive mood swings throughout the year. You just have everybody would be incredibly happy one day and just absolutely just devastated the next.
That's right.
So yeah,
But
I mean, thank
I do like the fact that going back to Michael Burry, that he's back on, not back, but he's uh, he deregistered his fund and allows him to he has far more control over what he does. And I there are very few people. I mean, the contrarians, at least in my book, even when they're wrong, they earn my respect because they at least they you know at the very least they bring a different point of view.
willing to be publicly wrong. Yeah, willing to be publicly wrong. It's hard, over and over again. I mean, this is the
Right.
thing with a lot of like the bears out there, right? Like, I think the challenge with Michael Burry is, I think he gets unfairly labeled as a bear, and I think that's not. I think what he's looking for is he's looking for massive market inefficiencies that
Right.
nobody else is. And it's a tough game. That's a tough game to play because most of the time the market is inefficient. When it's inefficient, you got to be at the right place at the right time, making the right bet. How many people, actually, one question I'd have ask is how many people would have the guts to buy the puts that he bought on Nvidia when he bought them? And he may be one of the few people, there may only be a handful of people that actually made significant money on Nvidia puts over the
Right.
last 5 years,
Right.
right?
Right.
Maybe just a handful of people. And so like it's fairly impressive to make those big bets, going the other way when everybody's saying one thing. I do think he had a market correcting sort of event though, in some ways. I think him speaking out, I do
You're
think
saying he
sort
was
of
able to influence the market, right? Got
I
people
think
to
he was
read.
able to influence the market. I really do. And I think that's a power that it's a new type of power that a lot of people have, especially of his stature, is to call attention to and call spotlight to. I think it happened over the course of series of weeks. You got to be able to recognize the pattern. It was the Brad Gerstner interview with Sam Altman and Satya Nadella, right? It happened over the course of a week. It was this sort of like general feeling that people had, but he was able to strike at the right time. I think he's got a tremendous feel for the market, and there's some people that have this feel where they can sort of sense maybe we're a little bit overbought here across the board or maybe we're oversold. It requires you to go through, navigate through many different types of cycles for you to really recognize that feel. It happens through conversation, through what you're reading, through just how like the market is reacting and
Right.
stuff. And so, yeah,
I mean,
do you think?
one challenge with being contrarian is the carrying cost. And especially when you take the position that Michael Burry has to take, that you know being ultimately right, you could lose a lot of money while still being ultimately correct, simply because the carrying cost is too high. And so you not only have to get it right, but you also have to get the timing right, which compounds the almost the improbability of something like that happening. So and therefore obviously the bears that I have a lot of respect for the guys. It's not about being bullish or bears. It's about um, not only getting the directional movement of markets right, but also getting the timing of it right in with such short spans. And so
Yeah.
yeah, no, I agree with you that you have to have that feel for the for the market.
Do you think so? I have a couple questions. I know we had this conversation when we met like last weekend, but like you had mentioned that if you were to bet on any over the next 20 years, if you were to bet on any sort of Mag 7, Mag 9, Mag 10, whatever you want to call it, one of these big like which would it be, right? Like, which makes you sort of like, and you don't have to pick one, but at least like thinking about one that would be best positioned. And then, the other question in some ways I have is Google overbought at this point? Or is it or is it going through its sort of like Nvidia moment where, it'll trade at 50, 60x multiple, but the revenue growth will be so meaningful because of how inelastic AI is and these investment companies' willingness to pay. I think companies have a much higher willingness to pay, by the way. I think most CEOs and executives would tell you based on what they're seeing with AI that they'd probably be willing to pay, 10, 20, 30, 40% more. That obviously compounds in a pretty meaningful way. Is Google overbought, or is it in some ways, is it still undervalued based on the run that it's going on, especially considering that, Mr. Buffett himself just put in his orders, right? Yeah.
Yeah. So listen, I do think it's a fascinating question. I think Google is simultaneously one of the greatest business ever created, but at the same time, it's also a company fighting gravity, almost an existential crisis in search and ads. So the answer to this probably depends on that latter part, like what happens to search with all these AI assistants, the 10 blue link question, right? And I do think the battle today is entirely about that. I mean, their cloud business is strong; it's not dominant. They do control a lot of distribution, which helps. But the LLMs are dramatically reducing distribution advantage, right? So it's just there. I don't think there is at least in my mind, not a clear cut answer. But I love Google's distribution ecosystem. Android, you have Chrome, you have Gmail, you have YouTube, and if they can integrate, you know, AI right, perhaps they can reinvent search before anyone else does. But there's an almost an unprecedented challenge on that business, and without the monopolistic position they have in search, I'm not sure Google can continue to the stock price can continue to go as high. I think market became convinced. I think they did not give Google's AI capabilities, particularly the impact that all the other AI assistants were having on search. I think the market woke up and said, listen, they are not going down as fast as I thought. And that's probably a stock to re-rate. I mean, that's kind of my view, but like, could it be a $10 trillion business 5 years from now? I think the answer really depends on what happens to search.
Yeah, are we prepared to have multiple $10 trillion companies, right? So I think it was just a couple of years ago that a bunch of these companies became $1 trillion companies, and so like, what does it mean to be a $10 trillion company? If you're trading at let's just say a 20 to 25x forward multiple, let's just say 20x. I mean, does that mean you're doing $500 billion in revenue every year, growing at 30, 40%, where's that growth going to come from? $500 billion of revenue seems like a lot, but in some ways it doesn't if you look at this like the labor share
Right.
of spend, right?
Mind share,
It feels
share,
totally doable.
first,
It feels totally doable.
absolutely.
Yeah.
Absolutely. And the interesting thing about the world we live in is that the incremental dollars, the incremental attention span, these things are converging to these hyperscalers. And the rate of conversion is compounding at much faster rate than it did in the past.
Yeah. Yeah.
The Amazon ecosystem, I'm on Prime, I'm doing this now, even healthcare is through it. I use AWS. On the companies, on the Renegade side, you look at this and I say, will this go away? Will this depreciate? Would this reduce or would I be using this more and more? Like the frequency of purchases, do I see more dollars going into this? And the answer is evident, self-evident. I'm spending more and more of my time. I'm buying more, using more and more of their services, and it makes sense for them to continue to centralize. Like, I was surprised the other day. My wife, we have our health insurance and all of this. She does almost all of her telehealth through the One Medical, the Amazon thing. Now you can buy used cars, the certified used cars on Amazon. The ad business, I mean, a third of all sorts. I guess what I'm saying is it is the third largest search interface now for all the goods you are going on Amazon. So you look at these things and you see each of them converging at a much more accelerated pace. And I just feel that I don't see real competition that could chip away at it at a pace where the compounding becomes negative, and until you get to that moment, the question of $10 trillion business, I mean, I would argue that it's already here, that the velocity is so inescapable that you're probably going to see 3, 4, 5 companies get to that point, and then the value of money is going down, right? Which means the nominal value.
I mean, this is an incredibly bullish. I mean, in some ways, like the what you would probably do is just like buy a basket of the Mag 7 and just hold on to them for 5 to 10 years. If you hold on to a basket, let's say you get 100K, 10K, 100K lying around, and you just sort of like equal weight bought ththese companies, you're gonna be up massively, it seems.
Right. Yeah, I mean, makes
Not
sense.
investment
I don't.
advice, but
Right, right. But so it's in many ways as a society, it is a little worrying though to have such powerful such large companies that they can now. I mean, a 10 trillion. How many 10 trillion economies are there?
there's only two
Two.
economies that have crossed the $10 trillion threshold. It's the United
Right.
States and
And
China.
right.
China is around 20, the US is around 30.
Right. So it's a crazy milestone for private enterprises, but it does bring an interesting and fascinating question of how large should the society let these companies be, right? Like at this, or think about this: Amazon, can they compound revenue faster than the U.S. compounds its GDP? Yes.
Well, I think the revenue and GDP comparison I've always found problematic because that's annual gross domestic product. If these were stocks traded, let's say on the market, they would probably trade at like some X multiple, right? How long is the US going to be around? How long is China going to be around? Let's say the US was in like an index that was trading in some like galactic universe market and it was a $30 trillion, GDP. So that's basically its annual gross domestic product, and you'd basically put some type of a multiple on that based on how long countries last. And so let's say it's 100 years or something like that. And so from that, I think you'd have to do it on a multiple basis. You know what I'm saying?
I
Like I
agree.
don't think it's
It's a fair point. It certainly
yeah,
is a
and
fair
like
point.
and like so I think from that standpoint, yeah, like it makes sense why there would be multiple 10 trillion. From that standpoint, like I'm surprised there aren't multiple $10 trillion companies already because what we're effectively saying here is you have basically what 30 trillion times 100, sort of like platform that you're building on top of, right?
Right.
Like,
Right.
you know,
I do think that's a really fair point that you cannot compare the annual metrics with the asset base,
right,
and that,
right.
I do think that's fair. But if you draw the compounding that's happening at some of these companies and at the scale that they are, sooner or later we will have to wrestle this question of how big is too big.
Yeah.
You know, big is too
I
big.
think you have to, we've always in tech we've always underestimated market sizing just based on the new markets that tech is able to create, right? A classic example of this is obviously I think Google's ad revenue is like how many businesses would have taken out ads 50 years ago, right? It's just not a lot, but the universe of companies that are taking out ads is so much larger because of how accessible it is. Uber turned everybody into a taxi rider, even though taxi ridership was just like, a very small percentage of people in cities because most people would opt for, public transportation or other means, a car ownership or something like that. And so I always think about like, how do markets get like fundamentally disrupted over like the long run and I think there are large multi-trillion-dollar markets just hidden in plain sight if you're able to arrange and organize the economy in the right way, and so I think a lot about, for example, what Airbnb did to real estate and the dynamics there, right? I mean, just real estate alone is such a large market. I always come back to like human desire to just be untethered to their location, untethered to, I think fundamentally, like, what is it that humans want? Humans want what they want when they want it without limits, right? That's the ultimate. They want their food delivered right in front of their door immediately. They want their rides delivered right in front of their door immediately, right? They want to be able to get on a plane and go anywhere. And so, like, these are like core desires that we have, right? I want to be able to enjoy time with family or friends, or humans have this desire to explore and be untethered. And so like if that is fundamentally true, then there's so many parts of current human society that have just these large like markets just sitting underneath waiting to be sort of you know captured and disrupted. There was one graphic that I saw that I actually made me think. There was somebody that had themselves as the CEO of the org chart, and then below them was basically different apps, ChatGPT for this, Claude for this, cursor for this, gamma for that, all of these. And it made me think, okay, so this person's the CEO of this company, but there's obviously a CEO of Claude and ChatGPT and CEO of all these companies. So in many ways, it made me think, okay, so like everybody will, I made this point last time, but like, does that mean like everybody's going to be a CEO of their own unique AI empire that like everybody else can they build an org chart around, right? Like, I think it's already in some ways happening, right? Like
Yeah.
you have these one person companies that are massively, one or small teams, 5 to 10 person companies that are creating outsized economic value
Right.
that are built on top of other people's 5 to 10 person companies. And so like you extrapolate that out, like that's pretty fascinating in terms of what's going to be possible.
Right. And on that note, I mean, what do you think, what does the 2035 look like from your standpoint? There's the universal basic income point, which usually is I, let's say the consequences of all the things that you think are, it's probably manifested as a society in UBC, UBI. But, are you excited? Are you nervous about anything? What does that sort of, 10-year horizon look like?
Going to this question, I think about just sort of let me just chart the course of like the past previous decades, right? So like 1995 to 2005, 2005 to 2015, 2015 to 2025. And if there was a singular sort of like reason why 2005 was really in some ways not that different from 1995, but 2015 was very different from 2005. And 2025 is very different from 2015. Access to cheap capital, right? The one thing that I would want to know is I'd want to know the interest rate going forward. How cheap will capital be? Because if capital is really cheap, I think we will have, certainly we'll have tremendous asset inflation, but I think we will have all the technology exists, right? Flying cars exist today, drone delivery exists today, all of these things exist today. It's just a matter of getting scale and building out, making the R&D investments, being willing to lose money for 5, 10 years to make sure that there's enough division of that technology in these large population centers. And that's only possible when capital is freely accessible and cheap. So that's the one thing that I would want to know for project like the interest rates in that sort of environment. That would, I think, tell me a lot. Now, I think even I would have probably said the same thing 5 years ago. The only challenge is interest rates did rise by 4%, and we still had massive asset bubbles, in some ways, right? And so, like how high would interest rate need to go, for it to be for us to actually not have access to capital in a way that allows for a lot of these technologies to flourish. But let's say looking forward to 2030, 35, I would say by that time, I mean, it is going to be obvious that, um, you know, uh, AI is, we will certainly have AGI, like I think in the sense that we will have like fully like companies that can just create digital. This is already exists today. It's just hard to implement it, but like it'll be clear by then that there will be these digital entities that are like humans that can just do work like humans. And you won't really need to hire anybody, by then, I don't
Right.
think, especially in a technology setting, right? I don't know about the physical world. Like, I think I think robots are in some ways, to me personally, I think robotics today is where AI was in 2017,
Yes,
2016,
absolutely.
2017, 2018. You know what I'm saying? Like where, yes, the ideas are there. We can make these humanoids, but like there still needs to be some breakthrough in terms of how we, I don't think we've figured out the form factor yet. I think there still needs to be a few breakthroughs for it to be. And so I think by 2035, robotics will probably be where LLMs are today. But I think LLMs and sort of digital representations of AI will be so far advanced. And I think it's a necessary technology to have in order for robotics to actually work, because you need robots to have a tremendous amount of reasoning for all of the different scenarios that these whether it's humanoid or other types of robots, they engage with humans. Yeah.
Right. That's fascinating. I feel like 2020 to 2025 was perhaps AI prototype era, and the next 10 years is probably a massive AI industrialization era where you will see about 2020, 2035. I would think that AI would be our primary labor force,
Yeah.
and humans would probably shift to more
In the
supervised.
service sector, for sure.
Right. And the biggest surprise to your point it will come from robotics, right? The autonomous driving, the urban deliveries. Like I see this in Miami, all these little tiny robots are running around with food delivery and
I
all
don't
other
think we've
stuff.
figured out the form factor yet. I think one thing was a lot of our form factor comes from movies and television, right? Like writers, writers and science fiction writers, and in some ways they're the prognosticators of where the world is at because they're they're able to sort of think through a lot of these scenarios. And so I don't think we've figured out the perfect form factor yet because we're still sort of mimetically copying what exists in like Star Trek or Star Wars universe or all these different things. I think, I don't think robots necessarily need to take like a fully human form. I think
You're
that's
right. I agree.
yeah, yeah,
Lot of the to be the primary labor in bunch of different industries, you don't necessarily need to have the humanoid
yeah,
capabilities, right? There are a lot of
right,
the autonomous driving, the delivery warehouse is already more or less
yeah,
automated.
yeah.
Construction could use more robotic, 3D printings and drones and robotic framing. I think the physical world, that's what will be far more surprised than than we have been so far. And to your point, I do think there are these open questions on the form factors, but it's kind of the melting ice cube. Like we're gonna take away from burger flipping to salad making to construction work, warehouse, autonomous vehicle, deliveries. I mean, you start chipping away at it, you will have very few incredible dexterity, like quick decision making on things like plumbing, etc. Those are probably the last final.
I think plumbing will be still very challenging to automate.
Right.
I think some of these really tricky roles will still be really I think there's other ways that you could solve that, by the way. I think, like better, prefabricated, bathrooms, right? Like though you can solve that in two ways. You could either try to retrofit robots to navigate every single type of like
These.
bathroom and unique plumbing
Yep.
setup, or you can normalize on a standard and prefab it, right? And so like there's really multiple ways for the economy to like solve this problem. But I do think I think the other thing is like again, like I don't think progress happens at the rate of technological advancement. I think it happens at the rate of any credible nation state and in some ways a political entity to be able to digest it, right? And so I think you have several elections between now and then. I do think there'll be much upheaval, right? If countries without strong institutions, I think will suffer, and not know how to navigate this new era because most of the way in which the nation state and governments that operate it earn their right to be there, the sort of monopoly on violence that they have is because they guarantee economic growth and job creation, right? If you look at the Fed really has two mandates, right? To control inflation and to have full employment or maximum employment. And so like that and it's probably the Fed is probably the most, if you had to pick one institution that is the most powerful institution in the world, right? I would probably choose the Fed because when the Fed dictates interest rates, it basically changes the monetary policy of all these different countries. And again, fundamentally, access to capital is basically sort of the how available capital is dictates in some ways your country's growth rate. It dictates inflation. It dictates social services. It dictates so much. I mean, in some ways, if you look at India's 8% GDP growth, it's because of how easily accessible capital has become, and how robust the capital markets in India have become. That's allowed the GDP of the country to really, eke out that extra 2 to 3 percentage gains, and start marching down a different sort of growth path for that country. And I do think, it's not about how, we already have this in some ways. I would just extrapolate the sort of I would extrapolate what already exists and sort of amplify it in the sense that places like San Francisco, New York City, but maybe we're coming full circle back to cities, but like, where the executive and where like a governing body can make rapid decisions and adopt things really quickly, they're going to grow by leaps and bounds. Other areas, I think it's, there's going to be more and more of a bifurcation between, I think, cities and these type of jurisdictions and versus, population centers.
On the question of Fed, it's an I do think it's a fascinating angle to look at the future from. What would happen? Where would the interest rate need to be for us to see the type of growth that, I mean, does the interest rate dramatically impact the future growth the way we've seen it impact, I guess, previous episodes of dramatic growth? And I'm not, two things. One, I feel like Fed is usually reactionary. I mean, they do have the dual mandates, but they're not, they're not prognosticating the future, and they're extremely data dependent, which is usually a lagging indicator. But let's take that aside for a second on how they make their decision. But if you really think about like what's happening around the world, right? What does AI do? I mean, AI, it has to drive labor cost lower, right? It has to drive the services cost lower. It should make a lot of these technology and all other things that we actually use more efficient and therefore cheaper, right? And you should see far more dramatic expansion on the supply side. Now, the foundational layer that continues to improve these models, that does require a lot of compute. It does require a lot of capital. That is the perhaps the most consumptive part of our economy of the world, where we need to continue to funnel capital. And therefore, I don't know if you remember that, the CFO of OpenAI was saying, hey, we want government to back
Backstop.
the and listen, they do have a point there that over time we may have to look at this as a public good.
Listen, whether, in some ways the government is the lender of last resort, the government does backstop the economy, right? Because it controls the base rate at which investment banks can borrow money, which obviously then frees up capital throughout the economy. So they have back. I think if America economy is basically growing because of AI right now. We are all in on AI, right? Our growth rate, most of our growth rate is coming from AI investments, whether it's data centers. If it turns out that, I think it's a worthwhile bet to make. I think fundamentally, like, we're a risk-driven economy. So I think we're taking a big risk with the whole economy right now in terms of whether it's going to pay off or not. But like, I fundamentally believe that, that it will. But I think if the government does backstop these companies, then these companies, if it turns out they're making outsized profits, they're going to have to be willing to be taxed at a much higher rate to fund some of these social programs that are going to need to come out on the other end to ensure
Right.
that people can actually survive, right? Like, you need to find some way to pay for universal basic income. And so it may actually change the way in which good companies are looked at, right? It may not, like, you may not be able to domicile your profits overseas. You may have to funnel them through. You may have to pay 30% tax on your profits to
Right.
actually fund these social service programs. But hey, that might be a worthwhile price to pay if you're a $10 trillion company. You know what
Right.
I'm saying? Because you're basically getting you have massive cash flow, and you're making so much more revenue. I would bet you, if I talk to any of these companies executives, and I would say, listen, I can overnight 10x your but your profit margin will be much. Anybody would take a 10x increase in revenue,
Right.
because you can do so much more with that money, even if it's less of a percentage. You know what I'm saying?
Right.
Yeah.
No, I listen, makes a lot of sense. And the other thing, the other reason I don't think the interest rate is it's going to be that higher is the debt deflation pressure, right? The US federal debt is, I mean, so huge that I don't think it's in the best interest of the Fed to somehow jack up the interest rate. I mean, the concern here is, would you see inflation? Would you see runaway inflation? And that would force them to, because I think those are the factors that would force the Fed to increase the interest rate. But then, I think I told you this. I met one of the central bank officials. His fear is that, not necessarily fear, but the way a school of thought that he gives a lot of credence to is AI is going to drive productivity and efficiency in such a way that you'll see 10%, 8 to 10% growth, GDP growth in the US. And to make sure that there's no inflation, the Fed would have to increase the interest rate in tandem with the real GDP growth. And therefore, we're going to live in a regime of, 6% plus Fed funds rate. The individual was so convinced that this is the way the world is going to head. He's like, listen, we're going to run as much surplus as possible and hold on to our FX reserves in USD so we can continue to buy US treasuries and fund our internal operations through that interest rate. I mean, there's that school of thought, and that also doesn't make some sense. But if I have to bet, I would probably think we're going to move into this unbelievable deflationary period, similar to what we've experienced since the late 1980s to this point, with the global trade and China opening up and all the cheap goods that we're able to buy. I think AI is probably going to fuel the next leg of such deflationary world, which is not bad as a consumer. I mean, except I do worry about the impact on the labor market, and I hope
Well,
you're
I think
right.
it's about, what goods get deflated, right? I think it's much harder to deflate goods that are in highly regulated industries, because there's just structural reasons why it's hard to deflate those types of goods, right? This is why most of a deflation in if you look at the past 30 years, 40 years, in terms of where deflation has come, it's come in areas where, like electronics, where there is not a lot of, regulation by default, compared to like real estate or education or, healthcare and some of these other industries. So I think regulation plays a big role in how much these things will actually like deflate. And I think it's I think there's a difference between pre-training costs of these LLM models and the sort of upfront R&D investment that you need to make, which is a one-time cost that you can amortize, and the value of dollar obviously decreases over time. But then there's the cost of inference, right? And if it turns out these models are hungry and hungrier for more compute, then it may not necessarily deflate as much as we think, because who's going to be okay with having access to a dumber model, because it's much cheaper, right? You actually will live in a world that where it may be the case that in order to get the best bleeding edge models, it actually ends up acting more like a Veblen good in some ways, right? Like a luxury good, right? And so where the cost of those like most advanced models is actually going up over time. It's not actually deflating, because there are people at the upper end, because the sort of like profit maximizing function for those companies is that you only sell it to the 1 in 10 US households that are millionaires, right? That can actually, and you might they might be willing to pay 10x more for the best. So I think the market is going to decide like what these things end up behaving like. I do think, yes, like there will be a large sea of incredibly cheap models and compute and intelligence, open source from China and other places. I hope we have a good open source model that comes out of the US here as well. But I think humans, they want the best, right? And I think there's value to having the best. And I think the cost will just get shifted, like they're just going to need to be much more. It won't be about physical buildings and some of these things that will deflate, but you still need to pay people's salaries. And there's still going to be massive competition for like the talent and like the locations where you're going to build these data centers and stuff. I'm obviously excited to see it all play out. And, maybe we'll have to save some of this conversation for our next,
Right. Makes sense. I just had a question before we. So it's like, what are the components of these? Is the cost of compute? People talk about cost of compute all the time. You have your hardware, you have your energy, you have the data center infrastructure that we talked about last time. Basically setting up these
labor.
in their base. You have the labor. But if you think, I mean, if you really think about it, the one that can really, so energy, I do think that we're gonna energy is perhaps one area where there's a lot of innovation, but if it gets overbuilt, which it should, but energy is one of the infrastructure where you should build, for the next
Well,
20 plus
actually,
years.
that's part of the reason why I think oil is massively undervalued right now. I think, what is it, $60-$65 per barrel? If it's true that energy ends up becoming a bottleneck, ultimately, for this, oil is going to need to trade at a much higher cost in order for there to, one, be a market to incentivize more energy creation. I would take a look at oil, because I do, there's so much demand for energy, and I don't think all of this green energy, all of these different pathways like solar and all, we're still far away. We're still going to need oil. In some ways, I think it's fascinating that AI is going to lead to an oil boom. Is the sort of like contrarian sort of like bet that I have a little bit
Okay.
of like, or it's going to lead to a return of fossil fuels. Because if it's true that this is as valuable of an economic product as it is, then where is the energy coming from? You can't make the math work, you know, with the green data centers, unfortunately, solar power data centers. Yeah.
Right. I mean, I think it's a fascinating question. I'm sure there is an equilibrium, and if you understand, how much compute you would need, so how much electricity you'd need, power you would need, you can probably get to that number, and that number, to your point, is probably higher than $60. But like,
Yeah. I
when you
don't know
think
what
of
it's trading at right now. I think it's trading somewhere between 60 to
60,
70. I'd have
probably
to, yeah. Yeah, exactly.
between 60 and 50, I think. Great. I mean, but we should come back to this on what is really the cost of compute? Where does the bottleneck really lie, right? On the whether the future could be inflationary or deflationary question, right? The software, the orchestration, all of that is perhaps not as expensive. Data center infrastructure is also, once you have building and all of that, I don't know how much you can pack, the install base or upgrade them. Maybe there's not a lot there. So it's probably and cost of power and the hardware that depreciate. But anyways, really fascinating.
Yeah. Yeah. It's 58.50, by the way, $58.50, the price price of a barrel of oil. You know, my fundamental, like the way that I'm looking at this is like, it's clear AI is valuable. The next question we need to figure out is like, how valuable is it to companies? Like, truly, how inelastic is this thing? I think companies are willing to pay 2, 3, 4 times as much. If it's true that you can have that level of reduction in your need for workforce, obviously, if they're willing to pay that much, it means, it obviously means that this thing is going to pay more than pay for itself. And then, and in order to bring down the cost, you're obviously going to need to build a lot more data centers. You're just going to need a lot more energy, orders of magnitude more than we have right now. So every single thing, every path of energy creation is on the table.
Right.
Whether that's nuclear, whether that's, you're seeing a lot of, Venezuela is one of the largest oil producers in the world. And there's a lot of military activity right now in the Caribbean. For the United States to secure interests and sort of oil could be one of the underlying reasons here. Energy could be one of the underlying reasons. I mean, um, uh, why all this is actually happening. And so, we'd obviously need to. That's obviously speculation. Like, I wouldn't. America's economic interests are a big factor here in the way geopolitics is being driven. And a
Right.
big sort of driver of America's economic interest right now is AI and the precursors to AI, because that is, again, the main underlying reason why our GDP is growing.
Right.
Barring data center build out and AI, our GDP growth would not be
We
impressive
might.
here in the US.
Right. We might
We
be.
might be in a recession. Actually. We might be in a recession. Anyways, this was a fascinating conversation. We'll have to wait another week to
Yes.
uncover some new topics and
We,
stuff.
if and
Uh,
by the way, if we decide, maybe what we do is we decide the topics on Monday. That way, we can really spend the time and do our
yeah,
share some ideas and
yeah. I think one thing I'm realizing is I do need to, just consume a lot more information in order for me to have like well thought out and well articulated points of view, for these types of conversations. But yeah. Anyways,
and
I'm gonna.
what's interesting is ever since the first chat, the way I look at the world had changed. I'm trying to create point of views and like I look at, I don't know, I read some kind of a news or see a data point that's interesting, and and I think that's probably what the eventual conclusion of this needs to be personally is that you see the world and you're trying to make sense of it. It forces you to do that. It's hard, but it forces you to do that,
Yeah,
and that's
forces
kind
you
of
to do that. Yeah.
awesome, man.
All right. Well, we'll have to thank our listeners and viewers here, and see everybody. See you.
Awesome.
Bye bye.
Bye.